Questions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through registered representatives of Cambridge Investment Research Incorporated, a broker-dealer member FINRA SIPC. Advisory service through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated. You are listening to the Spend Life Well Show with Kingdom Advisor Mark Trice and Jesse Hamilton. Mark and Jesse are passionate about seeing you spend life well. If you want to save for and invest in the future, then this show is for you. Call now and join the conversation with your financial questions. 512-452-1120. 512-452-1120. Mark and Jesse will answer your questions and discuss practical financial principles based on a foundation of biblical wisdom. So if you're ready to quit worrying about your finances and begin to spend life well, then call 512-452-1120. And let's meet your hosts, Mark Trice and Jesse Hamilton.
Well, good morning, everyone. We're glad you're chosen to spend a few minutes with us as we talk about money and wisdom in the Bible. And I just want to welcome you to the Spend Life Well Show. I'm Certified Kingdom Advisor Mark Trice. Here on the Spend Life Well Show, we apply biblical wisdom to your financial journey. And I'm joined in the studio today by my co-host and fellow financial professional, Jesse Hamilton.
Good morning, everybody. Welcome to the Spend Life Well Show. We're glad you're here.
Jesse, you weren't with us last week because you and your wife had decided to subject yourselves to a half marathon. How'd that go?
It was a blast. We had so much fun. There's nothing like that race environment where people are screaming and you get all that adrenaline going. But it was a tough race, but we finished it in a good time, and we feel very accomplished. And it was so much fun.
So I didn't ask you, did you improve on your time from previous years?
Well, we actually slowed down by 2 minutes, but that's because we had over 1,000 feet of elevation change in this race.
Oh, wow. Who's counting? A couple of hundred, couple thousand. Yeah, we were talking about that on the show last week, and we kind of calculated that you were probably in the middle of Cameron Park running up those hills right about that time.
Uh-huh.
So
Yep.
I asked the listening audience to say a little prayer. So, folks, our verse this week that we're going to focus on is from Psalms 1 and 2, which says, "Blessed is the man who does not walk in the counsel of the wicked, or stand in the way of sinners, or sit in the seat of mockers. But his delight is in the law of the Lord, and on his law he meditates day and night." And that's what we're kind of going to contemplate a little bit, is just talking about our relationship with God and how that impacts our wealth that he has blessed us with. You know, you can call us right here in the studio. We want to talk to you. We got some pretty deep conversations we're going to have today. Call us here in the studio at 512-452-1120. That's 452-1120. Jesse, give us an idea what the things we're going to visit about today.
Sure, Mark. So today's program is going to contain a conversation about the foundations of a gospel worldview and how that applies and impacts our relationship with money. So it's going to be a really interesting conversation. We would love for you guys to call in and give us your comments on that. But of course, we're also going to talk about what happened in the financial markets this week, the real March Madness, if you will, and how the events around the globe can impact your portfolio. We'll also hopefully get to our mailbag and answer a few questions from there for our listeners. But once again, we want to talk with you. Give us a call. That's 512-452-1120.
That's right. And you know, you think, Jesse, we could maybe come up with a March Madness mutual fund or stock bracket and have them compete over the weeks and see who wins. I know Jesse and I are a little disappointed because we're not able to watch our favorite teams who are no longer in the tournament, but we're so proud of them, and I'm glad we got to watch them a little bit there.
Mm-hmm.
So, you know, you may not be a big basketball fan, but there's a lot going on in the world of basketball, and also in the world of investments and markets and things. And so we'll talk more about that later in the show. But you can also send us an email at radio@spendlifewell.com. That's radio@spendlifewell.com. And we'll respond to you or right there on the show, or maybe we'll pull one of those questions out of our mailbag for an upcoming show.
Mm-hmm. Yeah, you can also watch us on Facebook or on other social media channels. You can find those by visiting our website, spendlifewell.com/radio. And if you follow us on Facebook, you'll get a notification that we're going live, and you can join us that way. You can also find all of our previous broadcasts up there. And I wanted to mention that you can sign up for one of our upcoming events. So on April 2nd, coming up soon, we're going to have our monthly market update like we always will. That should be a very interesting one with everything going on around the world and in the US. And then right after that, about 10 days later, we're going to have a webinar for those nearing retirement. We're calling it Ready for Retirement. Prepare well today and spend life well tomorrow.
It's amazing. A lot of folks think that they can just retire and everything will work out, but there's a lot of planning and preparation that goes into retirement and getting ready to retire. Although sometimes we'll have people walk into the office and they'll say, "I want to know if I've got enough money to retire." And we ask them, "Okay, when do you think you want to retire?" And sometimes their response is, "Oh, I just gave notice at my job." It's like, "Oh, okay, well, we'll see what we can do to help you," but that's not planning. That's a kamikaze approach to retirement. You got to make sure that you do, and really, of course, retirement starts the day that you enter the workforce as a young adult. But really, certainly, especially the last 5 years prior to retirement, there's a lot of work and preparation that has to be done for that. But yeah, join us on those webinars. That's at spendlifewell.com/radio. You can get links to those things just at spendlifewell.com. That'll take you to our website for our financial practice that we operate during the week. So, Jesse, we've been one of the things I wanted to share with our audience today is we've been doing a lot of reading, and we as a team read a lot of different books, and lately we've been reading Paul David Tripp's Redeeming Money, and this was actually the basis for the Kingdom Advisors conference that I just got back from a few weeks ago. And in his book Redeeming Money, he talks about the 4 foundations of a gospel worldview, and really he's talking about how our worldview impacts our view of money.
Yeah, his chapter that we're going to talk about, he calls it putting the right glasses on. So how do you see your world? And if you don't start with your foundations of a gospel worldview, then you're not going to have the right view of money. So that's kind of where we're going with that conversation.
Yeah, because the lens at which you view the world. That's why putting on the right glasses are important. It's March Madness, so I'm going to do my 3 glasses here for those of you on the Facebook. So the reference to 3-point shots and stuff like that. So when we, if we don't have the right view towards money, if we view that in isolation, that's where money problems begin, because we see that we're living with a sense of ownership and entitlement, and that's not the right way to look at this. So, he looked at these things, and we talked about that. We've talked about the verse in 1 Timothy 6:10, the love of money is the roots of all kinds of evil. And, we have example after example that people are chasing wealth for the wrong reasons. And I last week, Jesse, I shared with our listeners that I for many years as a young adult, I just chased a higher paycheck, and so I would move from company to company every 3 or 4 years or so because they were going to pay me more money for my skill set, and I just kept doing that. And ultimately, I got to a point where I was at the pinnacle of my career in that particular industry as a young man, and doing very well financially, but I found no fulfillment. In that. And, why we do the things we do with money is really a reflection of those glasses that we have on. And Paul David Tripp says, his first point in this 4 foundations of a gospel worldview is at the center of the universe is a God of incalculable glory. And when you look at this from the standpoint of money and what God has to say about our wealth, you begin to understand some of the problems that people have with money. We don't. It's not so much that we should be looking at the right budget and making sure we're investing the right things. We've got to surrender ourselves to Christ.
Well, isn't that one of our first foundational points of our show that we try to talk about all the time, is that God owns it all?
That's right. That's right. If we don't start with surrendering ourselves to a life of following Christ, even if we're not in debt, even if we're going to use the way that God use money in a way that God never intended.
Mm-hmm.
And so this may be why so many people have money problems, because we're not surrendering ourselves to what God wants us to do with our lives and ultimately our wealth. And we think we're okay because we're able to pay for the things we want,
Mm-hmm.
but we're really not okay. And this is what Paul David Tripp is talking about. It's like, look, our heart is not in the right place.
A lot of
So
people think that the foundation of a sound financial life is a good budget, right?
yeah.
And
And
Tripp
Dave Ramsey
here,
talks about this a lot, and we love Dave.
right?
He's a great guy, and he helps a lot of people. But he's really more talking about a transactional world or a transactional process, and the things that Paul David Tripp is talking about in his book, and that book's Redeeming Money. We're going to make sure that's on our website, but so that you can buy that somewhere, or at least find the name, Redeeming Money. But
Mm-hmm.
it's not so much a transactional process; it's a transformational process that we're looking for,
Right.
and why we want to help people with their money.
His
And
his analogy there is from the book is teaching a little boy to throw a football, but not telling him what the game of football is.
yeah, yeah. I mean, how would you know what you're supposed to do or be able to relate to that if you didn't know what the purpose was?
Mm-hmm.
And I think that God wants us, and that's why He's put over 2,000 verses of Scripture in the Bible dealing wealth and positions. And so, Jesse, the second point that the author makes here is we live in a terribly broken world, broken up by sin.
Mm-hmm.
And
Something that we have to remember, and as a part of our foundation every time we think about money, is that our world is filled with sin, and it's a matter of the heart.
and if we'll fail to understand money properly, and the money problems that ensnare us, if we ignore that fact,
Mm-hmm.
because we're completely and constantly being bombarded by images and messages and things that are driven from a worldview of sin.
Right.
And in this broken world, money is just not used, it's misused. And we face money temptations every day.
Yeah.
And we're being told lies every day. And many every day, many of us are just being seduced into asking money to do for us what only God can do. And this is what Paul David Tripp is talking about in his book. So I think it's really amazing when you look at this from a perspective of transformation versus transactional. And what was his third point of those foundations, Jesse?
Well, the third point is the good news that God offers us his heart and his life transforming grace.
That's right. We
So,
live in
Romans 6:23, for the wages of sin is death. That's the first part there. We live in a terribly broken world. The second part of Romans 6:23 is that the free gift of God is eternal life in Jesus.
That's right. I mean, we do live in a world where sin exists. We also live in a world where grace abounds, and God sent His
Mm-hmm.
Son to live, die, and rise again, so that you and I would have everything that we need to live, love, and serve God as He
Right.
intended. And what's that fourth one there?
Well, the fourth one is the most exciting to me, that we are created to live for something bigger than ourselves. We have a much greater purpose, and God has a plan that he's already written out for our lives and our money.
And if we know that, Jesse, then we should be managing our money in a way that we know is going to be honoring, glorifying God.
Mm-hmm.
If we put on those right glasses, as Paul David Tripp says, and Paul David Tripp is a well-known pastor and author. You may not have heard of him. I encourage you to check him out.
He's got a great devotional book if you're looking for an easy read devotional for the
Yeah,
morning
what was
too.
that one called, Jesse? Because I know
It's
you're
called
reading
New
that now.
Morning Mercy.
New Morning Mercies, yeah. So when we look at it from the standpoint of God is taking care of us and providing for us, we praise him. And when he doesn't, we tend to question his goodness and back away from
Hmm.
him. So we would not be so arrogant to think that everything in creation was made for us to use as we wish.
Right.
But that's kind of the way the world teaches us and spreads this lie that, we really should do whatever we want. You deserve it now.
Yeah,
And so,
Tripp's one of his foundational points for the entire book is that your financial life does not operate independently of anything else. It's all intertwined with, how's your spiritual life, and how even down to the practical levels of how you interact with your family and your friends. It's
and
all connected.
it's all connected, right, to this relationship with Christ. And so we're going to be talking about this over the next several weeks. We may even get Pastor Tripp on the phone with us and join us. When we come back in the next segment, we're really going to talk about some of the things that are going on in the world and how do we look at that from a Christian worldview.
Hmm.
We'll also give you an update on the markets, but we want to talk to you about what's on your mind. Give us a call in the studio at 452-1120, 452-1120. We'll be right back, and you're listening to the Spend Life Well Show. Do you worry about your finances? Thinking about getting kids through college? Or just dreaming about retirement one day? Hi, I'm Certified Kingdom Advisor Mark Trice and founder of Clear Vista Financial here in Central Texas. Scripture teaches us not to worry, but to prepare for the future and to commit our plans to the Lord. Sometimes that is hard to do in practice. Wouldn't it be nice to have an advisor, one that shares your faith, who will guide you along the road towards your financial goals? Visit us at spendlifewell.com or give us a call at 800-491-4508 for a complimentary consultation, and we can show you how to spend life well. Visit us on the web at spendlifewell.com. That's spendlifewell.com. Advisory services through Cambridge Investment Research Advisors, Inc., a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated.
All right, welcome back, everybody, to the Spend Life Well show. This is the second segment of our show where we talk about the markets and what's happening in the world. We would love to hear from you. If you want to give us a call and talk about these things on the market, that's 512-452-1120. But Mark, let's dive in here and talk about some of the major indexes and what's happening in the market.
Yeah. Why don't you give us an update on what happened this last week?
Cool. So let's start off with the S&P 500. This is a really popular index that looks at the 500 largest companies in the United States. We use this index often to compare our performance and various things that are happening in the market. But anyways, that index is somewhat of experiencing a rally, wouldn't you say? Over the past two-ish weeks, we've seen some strength in it. That doesn't mean a healthy market by any means, but this week that index was up 1.79%.
Yeah, that's got some ways to go here before we say we're out of the woods. Certainly, there's a lot of things, and
Certainly.
we'll mention that in just a moment. But there's a lot of we broke through some short-term or near-term resistance this last week. Of course, the week before was a great rebound, but it's still indeterminative or not determinative yet if this is really we've bottomed out or not.
Right.
There's certainly some signs there that we may have, but caution is the word. We think that volatility is going to continue to persist like it has for much of the year. We think that'll happen for some time to come.
Yeah, that rally I was referring to does not show the whole picture, because even with a strong rebound over the past couple of weeks, that index is still down 4.68% year to date.
And what a lot of people don't realize is that when you lose a lot, in other words, the S&P 500 was down by, I think, as much as 13% at one point. That means you've got to earn 14, 15% just to get back to where you were.
Mm-hmm.
And yeah, we've moved up a lot in the last 10 days, but that doesn't mean that it will continue. So we see a lot of chop around this, and we saw the same thing back in 2007 and 8. a lot of people don't realize that all the chaos that happened in the fall of 2008 and early of 2009 actually really started to develop in the fall of 2007.
Hmm.
So almost a full year before the carnage really began to unfold, and Lehman Brothers closed up and
Oh
went
yeah.
bankrupt. Lots of different things, and so it really started, in that October of 2007 is when the thing started to unwind. So sometimes bear markets, and we're not in a bear market technically with the S&P 500, but sometimes bear markets take a while to develop and unfold. So we
Mhm.
just urge caution to people.
So let's talk about the NASDAQ. That's a technology-heavy index. A lot of the huge tech companies that we can all name off are a part of that, and it tends to be a pretty big mover. And this week it was up 1.98%, but year to date that's still minus 9.43. And if we go back even further and we look at the middle of November of 2021, that index peaked. And if we go that peak to yesterday's close, it's still down 12.6%.
Yeah, I mean, we've moved up a little bit, but that's not to say that this is over.
Mm-hmm.
And we'll be the first to tell you on this show when we think things have returned to normal. But we're going to continue to see a lot of volatility
Right.
in the coming months.
So if you look at the peak to trough on the Nasdaq, that's mid-November to March 14th. We're looking at almost 23% drawdown, which is considered technically a bear market.
Yeah, that's a lot. That's a lot.
So
What
let's
about-
talk about, real quick, let's just reference small caps, because I'm sure there's a lot of you out there that might hold a small percentage of small caps.
Undoubtedly, you probably do in every portfolio if you have a default 401k plan.
Right. So that index that we follow is called the Russell 2000, and it was down 0.55% this week. And in terms of the year to date, we're looking at minus 7.3.
Wow. And I don't know, did you have when it peaked back in November too in there, Jesse?
Yeah, I've got that here.
Yeah. So it's interesting because large caps were doing, and large capitalized tech companies actually did fairly well this week. But things like the small caps, which was really, when you see small caps really strong, and that's indicative of a really healthy economy, and we're still not seeing that. What's been the drawdown since the peak?
If you go back to the second week of November to yesterday's close, we're looking at about 13%, which is well into correction territory.
Correct. Yeah. And I mean, like I said, it's come up a lot in the last month or so. But like I said, we're going to continue to see these things. What about bonds, Jesse? Because bonds,
let's talk about bonds.
This is the dangerous one that people are not really aware of, and they need to pay attention.
Mm-hmm. So we follow an aggregate bond index, if you will, to track how that part of the market is doing. And unfortunately, this week, that index was down 1.85%. And that's part of a year to date of minus 7%.
And that's not even since the peak, though, right?
Right. It's not. And this is traditionally what the average advisor would say is the safe place to be, right?
Yeah, and that's the majority of the industry says, using modern portfolio theory, says, hey, if you want to avoid risk, buy more bonds. Well, the bond market's been unraveling for well over a year now. And if you're holding the typical 60-40, 60% stocks, 40% bond type portfolio, the bond portion of your portfolio is a drag on performance big time. Because remember, Jesse, I've shared many times, bonds are like seesaws, and interest rates are going up, which we know they are.
It is happening. It already has happened.
And will continue to happen. I mean, this last week, some of the regional Fed chairmen basically said that we may need to raise rates to over 3% this year alone to cool inflation. And so, this is a big deal. Bonds are hurting, and I want to say, since the peak, what would you say the peak was on that? What about the 20-year Treasury index? If we look at that, it's down about 17% since the peak, right?
Yes,
That's
it is.
just in December.
The first week of December to yesterday's close is 17.06.
Okay, so if you're a pre-retiree or you've recently retired and you're holding a lot of bonds, you may be wondering why your portfolio is going down in value, and it's not. You can't blame stocks and bonds, or excuse me, stocks altogether, and you can't blame Russia and things of that nature. Bonds have been deteriorating for some time, and the typical financial advisor is not going to talk about that with you
Hmm.
because their most common mantra is, "Don't worry, it'll come back." But we're going to see rising interest rates for a long time now. At least we predict. I mean, I'm a trained economist, and this is what I believe. So this is my opinion. But reading the tea leaves here of what the Fed has to do if they want to try to tame inflation, they may have to create a recession by raising interest rates fairly fast. That's going to
Hmm.
have a ripple effect through the economy.
So, Mark, a lot of the way that we manage money here is to look at the sectors of the stock market. And
Yeah.
so let's just briefly talk about what's working and what's not working.
Okay.
Over the past week, and really throughout the entire year, we've seen energy perform very well. And that's just due to increased prices all around the board. Production, gas prices, it's all going up. But that means that that sector performs well, right?
Yeah, that's right. And so typically energy type companies do better in an inflationary environment. And that has held true so far this year. I don't know if you've got we can't give the ticker for that, but if you've got a indication of the energy sector year to date, mine's not refreshing over here, Jesse,
Yeah,
so I can't.
it's over 40%,
Yeah.
41.8.
So, if you have questions about that and what's in your portfolio, give us a call. You can call us right here in the studio. We'll talk to you 452-1120. There is no question that is too complex, no question that is too simple. We want to hear from you, and so we encourage you to give us a call at 452-1120. What do you think? I mean, do you think inflation is going to continue to go up? Are we going to continue to see gas prices go up? Um, Jesse, I got an email from a friend
Okay.
earlier this week, and he's a fellow financial professional on the East Coast. I've known him for about 25, 30 years, and he basically was basically talking about food. Now, why is food? Should we be talking about that on a financial show? Well, that's because you may have heard reports that the world supply of wheat and corn are in jeopardy due to Ukraine and Russia both missing this season's planting window
Hmm.
for obvious reasons, right?
Yeah, no, they supply a ton of the world's supply of wheat and corn and barley.
Yeah, and there's like Russia and Ukraine together. It's about 30% of the world supply of wheat.
Hmm. See,
And
I didn't realize, excuse me, I didn't realize that the Ukraine is an extremely fertile country in terms of soil, and that's basically that's what their flag represents, and that's
yeah,
really what they are as a country, is they're a farming country.
it's the blue sky over the golden fields of grain.
Hmm.
And they that region produces about 32% of barley. And of course, what's the national flower of Ukraine? It's the sunflower.
Sunflower.
And they provide 75% of the world's supply of sunflower seed oil.
Hmm.
Now, Jesse probably doesn't know this. I didn't tell him this, but I had to go. I have to fertilize my fields. We
Hmm.
produce hay on some of our fields. In the fall, a 50-pound bag of the fertilizer I use was about $14-15.
It's not
I
bad.
purchased, not too bad. I purchased the same bag last week because it's springtime and it's about time to do that. It was over $30 a
Mm.
bag. So in just a span of 6 months, my fertilizer costs have doubled. And what's happening is there's a domino effect there. We've seen all these things with rising prices, and just in the last 4 weeks, we've seen prices of wheat up 21%, barley up 33%, and fertilizer up 40% just in the last 4 weeks. So if I just had thought ahead and said maybe after Christmas I'll buy fertilizer for the spring and summer, I would have saved a lot of money. And what's happening is major producing countries like Brazil And also, I put Texas. We're our own little country. Farmers are cutting back on the use of fertilizers. I've talking to a friend in my life group, and he was saying they're not putting out as much fertilizer. So what does that do? Well,
Not as much crop.
not as much crop yield. There'll be less feed for livestock, and poultry, which is going to result in lower animal weight and less chicken, eggs, turkey, pork, and beef in stores. And so you've already been seeing rising prices this year on gasoline, right? I think I filled up yesterday. It was $3.85, so it's ticked down just a little bit than it was the week before. But you've seen that. Is it going to surprise you that we'll see the same thing going on with groceries? So,
Well,
I think
it's a two-pronged approach here. There's two reasons that we're going to be seeing such growth in the price of our food. We have the whole inflation thing going on its own, right?
that's right.
With the Fed and the stock market booming, or I guess not anymore, but the habits that we've been having over the past couple of years, combined with this crisis, it's about to get expensive.
We're already still recovering from the pandemic, where a shortage of chips means that you can't really buy a car, or if you do buy a car, you got to wait for the chips to come in. So half the stuff doesn't work, and so a lot of things that with cars, computers, and phones, etc., they require precious metals. Now, since January 1st of this year, nickel is up 65%. In fact, they've stopped trading of nickel in London at least 4 or 5 times in the last week and a half. Aluminum is up 56%. The cost of steel is up 27%. So would I say this is the worst idea to tighten your budget and set aside more money and ready yourselves for a rough time ahead? We were talking on before the show with our producer, Daniel, about, hey, stock up on some things. If you got the resources, maybe it's a good idea to stock up on a few food stuff items and prepare for that, because I think prices are going to rise. Now, you might be worried about your investments in things, and we're here to talk about that. You can give us a call at 452-1120, 452-1120, or if you're listening on our social media channels, type a question there in the comment box, and we'll be able to respond to that on the show. I think I don't want to sound mercenary or even morbid here or alarmist, but we manage our investments in a certain way that we can fight this, and we can still continue to invest in a way that's sound and good stewardship, and following biblical principles with that. And I think that, if you have not talked to your advisor about what they're going to do, you need to talk to someone about that, because you need to have a plan for what you're going to do as we do that. So we're invested in things, and we're not going to give you particular tickers or anything like that, but we're invested in commodities, metals, energy, and some other things because as inflation rises and the war rages on in the Ukraine, these positions could be buoyed by rising prices and some of those falling dominoes that we're talking about, because we're going to see the impact of that lack of food supply here soon. Now, we might be wrong about this, but we hope we are. But otherwise, we're going to work with our clients to make sure that they're invested in the right thing and safeguarding against catastrophic losses. So, it's all we can't see the future, right, Jesse? I mean, the Bible tells us we shouldn't presume upon the future, but there's so much evidence in the Bible about being prepared. And, so much so that we stopped calling our financial plans a financial preparedness plan, because things will change. You don't anticipate that Russia is maybe starting a global conflict. You can't anticipate these things. You can't plan for them, but you can be prepared to adapt to them. So when we come back, Jesse, I want to get in and talk about a very important part of people's investment portfolio. Many of you probably own these, and those are target date funds. Target date funds are one of the most misunderstood investments out there. We're going to make a little sense out of them when we come back. Folks, give us a call, 452-1120. You're listening to the Spend Life Show. We'll be right back. Did you know the Bible talks about money and possessions over 2,000 times? Well, maybe we should pay attention. Hi, I'm Mark Trice at Clear Vista Financial. we work with clients to steward their resources based on a foundation of biblical wisdom. Learn more about Clear Vista Financial by visiting our website at spendlifewell.com. That's spendlifewell.com.
Securities through Cambridge Investment Research, Inc., a broker-dealer member FINRA, SIPC. Advisory services through Cambridge Investment Research Advisors, Inc., a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated.
Join us on Facebook to see the fun that goes on at the Bridge Austin. There's behind-the-scenes pictures, live videos, and news. We have a wealth of faith to share with you. Just look for the Bridge Austin on Facebook and hit like.
Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions. Securities offered through registered representatives of Cambridge Investment Research Incorporated, a broker-dealer member FINRA SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated.
Welcome back to the Spend Life Well Show. I'm certified Kingdom Advisor Mark Trice, and joined in the studio by my partner and fellow financial professional Jesse Hamilton.
Hello.
Jesse. The last segment may have sounded kind of a downer, but it's not. It just means that God has given us people to help us through our financial lives, and He's done that through Scripture and through advisors who want to apply biblical wisdom through the financial advice. And if you're looking for someone that will take that gospel worldview and apply it to help you apply it to your finances, I encourage you to go to kingdomadvisors.com, regardless of where you are, and you can find a certified Kingdom Advisor, financial advisor that can help you with these conversations wherever you are around the country. And we got many in Canada and around the globe of people that have committed themselves as financial professionals to help others with biblical stewardship of their wealth. So I think it's a really cool thing that Kingdom Advisors offers qualified financial advisors that want to earn that designation. And I just think it's we're talking about in the first segment of the show about Paul David Tripp and redeeming money, and how our heart view towards our relationship with Christ really can drive our actions and decisions when it comes to money. But Jesse,
Mark.
Go ahead.
During that second segment, we were talking about all these really heavy topics and honestly scary things that we could see happening in the next few months of our lives. But I was just reminded of that first point from Paul David Tripp, that at the center of the universe is a God of incalculable glory.
That's right. And our verse for the day, Psalms 1:1-2, stay away from bad counsel, but seek God's law and meditate on it day and night. And when you work with a certified Kingdom Advisor like myself or others around the country, they're putting that Christian worldview first and foremost. It's not about the wealth management; it's about the heart management, and we want you to have that advice. And we use a lot of the same things that a typical financial advisor might do, but we look at it from a different perspective for sure.
Mm-hmm.
So Jesse, I'm sure we've had a lot of questions coming this week about what's going on in the markets and around the world and what things people should do with their wealth. Let's go into our mailbag and answer a question or two.
We got a handful of mailbag questions, but I'm going to pick one that is especially relevant to our conversation on target date funds.
Okay.
So it doesn't specifically reference them, but it's similar. So this comes from Olivia. So if you're listening, this one is responding to your question. This came to our mailbag via email, but I'm summarizing here. But she essentially says that my employer offers a retirement plan, and I've passed 6 months of working there, so I'm eligible for it now. Her question is, do you have any easy strategies on how to make the most of it? And should I participate in a Roth option? Okay.
All right. The answer is yes, if you can, and they have a Roth option there. We highly encourage that if that fits within your budget. That those are contributions that are going to be made with after-tax dollars. So it's not going to reduce your taxable income like it would with a traditional 401k option. But the Roth 401k is a great, especially as you're young, you're starting into a new job. I highly encourage you to do that. That will pay off, from a tax perspective in a big way later in life when you're nearing or in retirement. So, the question about what do I invest in, because you don't get a lot of advice with your workplace 401k or retirement plan, Jesse. And, it's probably a good idea we have a conversation about target date funds, because that typically a target date fund is typically the default option or qualified default option, which we'll talk about in a second, for many investors in those 401k plans. And target date funds were really kind of first introduced in the early 1990s. And they were originally, a company used them for college savings plans, because you kind of have a target date, right? Your child's born, they usually go to college.
18 years later.
18 years later, they're going to college. So, they started applying those really largely. The idea was, as you get closer to that event, in this case, it was the child going to college, or maybe now it's more about I'm going to retire. The target date fund's asset allocation mix changes over time. In the early years, the allocation mix is really focused more on risk, and when we've got a chance to take on more risk in things like equities, because we've got a long way to retirement, right?
Sure.
And
those are more high risk.
That's right. And we become increasingly more conservative as time progresses. And so things switch from stocks to more bonds over time. But this is all based on the modern portfolio theory, which we think is not the right way to manage money. But this is how target date funds work.
I mean, they really have an unsophisticated tool bag when they're going about figuring out their strategy, right? I mean, they're not using tactical approaches or thinking about individual people's needs by any means. It's just a model. It's a statistical model.
They put you in a basket regardless. They don't ask you what your situation is. They just put you, because based on your age and you think you're going to retire at 65, they put you on this glide path where assets are moved from riskier to conservative over time. And so many people are, unfortunately, not duped, but they're led to believe that the 401k plan, or even worse, the employer, is taking care of them. They know about when they're going to retire, et cetera. And so the usage of those target date funds didn't really take off until about 2006. And that's when...
Is that when everybody adopted them?
Well, there were two things that really happened around that time. And of course, this is right before, because what was happening before, the default investment option, qualified default investment alternatives, we call them QDIAs, was basically conservative money market funds. Like, if you didn't make a selection, we're going to put you in the money market fund. Well, that's not going to make a whole lot of money, right?
Well, in 2006, they were finishing up the rally after the first collapse and headed towards the second.
We're headed towards the second. Now, we have the wisdom of hindsight in this situation, but right before all this, two major events happened. First, a lot of behavioral scientists started recommending that 401k plans use automatic enrollment to encourage participation, because we as human beings typically are not going to sign up to put money away that we can't use for 30 or 40 years on our own. And so those behavioral scientists, they were right. For when they implemented that, where employers started doing this, where it's automatic, that participation skyrocketed. You have to actually opt out of participating in your 401k plan. You're automatically enrolled at a certain point if your company has one.
Right.
But it created a new challenge, and many participants, 401k participants, were either unable or they're incapable of making an investment decision. We can have a whole show on the biases and the randomness that people select funds in their plan. So this target date fund option was really, it gave an easy out for investors. This led to the second major event, which is the passage of the Pension Protection Act 2006. And that act specifies 3 qualified default investment alternatives that plan sponsors can use for participants that don't make an investment election: the target date fund, some balance funds, and managed accounts are usually done by outside advisors and stuff like that.
So this essentially changed the precedent to, if you don't check the box, we're going to put you in the money market. To
Right.
the new precedent is, if you don't check the box, we're going to put you in a target date or a balance fund. You're
Right.
probably going to be exposed to some risk.
And it's chosen by the employer.
Mm-hmm.
You know, we work with companies all the time, and sometimes you never know who's been tasked to go research the 401k plan.
Mm-hmm.
It might be an HR professional, but most oftentimes, whoever it is, they're not experts in investments and finance. And so they just go with whatever the fund company tells them. And not saying there's a conflict of interest there, but there probably is, the fund company of guiding of investments or where people are going to put their money. So after that, in those years prior to 2006, target date funds grew from nothing to about 150 billion. So in just 2 short years after that. And so now those target date funds over time have grown to over 2.5 trillion as more companies have adopted this. Now, as we kind of alluded to, or Jesse kind of alluded to it a moment ago, we're getting right before we have the 2007 to 2009 market crash. And so a majority of those funds lost over 25% during that time.
Ouch.
And the risk in those portfolios have actually increased since 2008, because the funds, to compete with one another, the target date funds, they're focused on performance, because performance to the unsophisticated investor usually wins the business. And you get more performance usually by taking on more risk. The problem, Jesse, with target date funds is
Mm-hmm.
that the people that use them are hoping that they are protected. And this is what we hear from clients. Well, my 401k plan's taking care of me. They know when I'm going to retire. And they think they're protected, but they're not. And so consequently, what I think has happened is the profit interests of those target date fund providers are out of line with the beneficiary safety interest. So in other words, you and I as the investor, there's
Mm-hmm.
a conflict of interest.
Right.
And the main benefit, if they worked right, of target date funds is protection in that risk zone. The risk zones, we kind of refer to it in our office is, you're approaching the retirement airport. You don't want a lot of turbulence coming in for a landing, right?
Mm-hmm.
And so you want to avoid that. And what's happening is that we found that with target date funds, investors are just taking on more and more risk as they get closer to retirement. And that's not the way to go.
It really is like autopilot. If you're on a flight and you're gliding down to make the landing, and there's a small storm that's in between you and the runway, the target date fund's just going to fly straight through it.
Yeah.
Versus a pilot who's controlling the plane might make a slight adjustment and go a couple degrees off and fly right around the storm. Nobody would notice.
I understand the value of having autopilot, but I want the pilot sitting there, right,
Yeah.
to take over if something happens. And that's what I think a lot of investors don't realize is that with target date funds, it's on autopilot and there is nobody in the cockpit.
That's what people really don't understand, Mark. We see it all the time is, oh, well, it's auto rebalanced to my specific risk tolerance.
Nope. It's on this autopilot glide path. And what we found over the years is as target date fund providers have started competing for your business, they're taking on more risk. So a typical, let's just say that you were going to retire this year and you had the 2022 target date fund. It should be very conservative. But what we found by evaluating a lot of target date funds over time is that that can range from anywhere from having 45% equities to 60% or more equities.
Mm-hmm.
And that's a big difference.
It is.
And
especially with the performance that we've seen over the past, year to date, 3 months.
Yeah. And I think what I found over the last decade, as the Federal Reserve has propped up the stock market, what I've found in the last decade is that gone is the old adage that you just, be very conservative the day you retire and invest your money that way. You can't, because bonds have not been returning enough yield, and now they're going to be going down in value. And so the target date funds are treated as a one size fits all.
Hmm.
And I guarantee you, because just like when we talk about Social Security, you know, just because your neighbor does it one way doesn't mean that's the way you should do it. And in fact, we were talking about Social Security. There's over 20,000 different ways if you're a married couple to draw your Social Security. The same thing is true. There's thousands of different ways to manage your investments to prepare you for the life in retirement that you want. And target date funds have become the default answer, but a lot of people think that they're on autopilot and there's someone at the controls to take over should things get bad. And a lot of people are waking up, especially in the pandemic in 2020 and year to date. Really, no one's at the controls.
Well, Mark, if I may provide a dissenting opinion here,
Okay.
I agree with everything you're saying, but I have several friends who have contacted me in the past few months, just like our listener Olivia, who called or emailed us, that they're signing up for their employer plan, and that same question, they're looking for the easy way to do it. And in my opinion, a target date fund is an easy way to click, yes, I want to participate. And you are in the market, you are participating in the gains and the losses of the market. And especially when you're young, like a lot of my friends are, that's not necessarily a bad thing. And I think
It
that
it's
participating is better than not.
right. It's right. Absolutely. I don't want you to think that we shouldn't invest, because you should, but you should be aware of what you're investing in.
Hmm.
And yes, when I'm 22, I can afford to take a little bit more risk than I am when I'm 65 or 70. But the point with the target date portfolios is that investors are lulled into thinking that you're on autopilot. You don't need to pay attention.
And the
But
older
with
you get, the more pertinent that decision is.
Absolutely. But at the same time, you want to make sure that you're aware of what you're investing in and how it's performing in different market situations at all times. And
Hmm.
we just see so many people that don't even open their statements because they don't want to know. And that's
What do
not a
you
plan.
do if your advisor won't help you with it, or they aren't mentioning it?
Well, I mean, you need to work with someone that will, because there's lots of resources out there, people that will help you with your 401k retirement plans. We offer a service as well where we'll help you manage those funds separately. You do the work. We just kind of give you advice of what's going on within your plan, because a lot of times it's just a menu of a dozen funds, and you don't know what to
Hmm.
do. We can help guide you through that. We'll talk to you about your unique situation. So rather being on a plane with a 300 strangers on autopilot, you need to have your own private jet when it comes to investments, and need to get that personalized service that you need. Give us a call during the week at 800-491-4508, or visit us at spinlifewell.com. Jesse, we're coming up to the end of the show. We always run out of time when we're talking about a good topic.
Yeah.
God willing, we will see you next week on the Spin Life Well show. Have a great weekend.